Now, you can look at a similar question, the previous question. You can look at a previous question. It has been tested just a few semesters back. Let's go to September 2021. September 2021. September 2021. Question who? 5B. September 2021. Question 5B. The question is saying the standard cost of certain chemical mixture is 40% material A at 20 per kg, 60% material B at 30 per kg. The standard loss of 10% is expected during production. During the month of July, the actual data was as follows. Material A used 90 kgs at a cost of 18 per kg. Material B used 110 kgs at a cost of 34. The weight produced was 182 kgs of good production. Let's start by getting our material mix, our material price variance. Our material price variance, you say it is your actual quantity, standard price minus actual price, Your actual quantity, you have two types of materials, A and who? B. The actual quantity you purchased was 90 kgs. The standard price per kg was 20 minus an actual price of 18. For material B, your actual quantity was 110. Standard price per kg was 30 and your actual price per kg was 34. 30 minus 34. This must be 180. That must be 400 and what? 40. The standard or the material price variance here for A, you had budgeted to buy at 20, but instead of buying at 20, you bought at what? 18. So that's good. So that is what? Favorable. B, you had budgeted to buy at 30, ended up buying at 34. So that is also what? That is adverse because you've spent an extra amount. Then you confirm what kind of variance this is, and this is 250, which is what? Adverse. 260, which is adverse. That is your material price variance. Let's get our material mix variance. And how do you get your material mix variance? You say it is your standard price, your actual quantity in standard mix minus your actual quantity in actual mix. Standard price, actual quantity in standard mix minus actual quantity in actual mix. And actual is standard price B. The standard price of A is 20, B is 30. Your actual quantity that was used is 90 for A and 110 for B. Your standard mix, the ratio of how you are using your materials is 40:60. That is 200. that is 100. Therefore, actual quantity in standard mix. You simply share the actual quantity using the ratio of your standard mix, using the ratio of your standard mix. And how will that be? This will be 40 over 100 times 200, 60 over 100 times 200. That is 80, and that is what? 120. Alright, your actual quantity in actual means we said, in actual mix we said is your actual quantity. So let's get your material mix variance here. Your standard price is 20. Actual quantity in standard mix is 80. Minus an actual quantity of 90. 100. Standard price of 30. Actual quantity in standard mix of 120. Actual quantity in actual mix of 110. This will be adverse, favorable. So that in total, that will be 100 favorable. Okay. The next item they are asking us to determine is your material yield what? Variance. Material yield variance. You said, how do you get that? You simply take your standard material cost per unit into bracket your standard yield minus your actual yield. Standard yield minus actual yield. Let's determine our standard material cost per unit. They were saying there that the standard cost of material of a certain chemical, 40% of material B was bought at 20, 60% of material B was bought at 30. So therefore, your material cost per unit, you're going to take those percentages times the price of each. Which will be 26. That should give you 26. Let's determine our standard yield. Then now need to determine our standard yield. Now they were saying the standard cost of a certain chemical mixture is 40 and 60, and a standard loss of how much? 10% is expected during what? Production. Okay. So this is what we do here. We first identify the input materials that were introduced and the output that was done what? Produced. Okay. And here with an 100% input of materials, with an 100% input of materials, your output was 90%. Your output was what? 90%. Why? Because of a standard loss of 10%. 10%. Okay. If you introduce 200, can ignore this percentage here. That way. If you introduce 200, how much should have been your standard yield there? Your standard yield should have been 180 units. If you are to use the material in the same way you are using according to what you budgeted, you should have produced 180 units. So your yield variance will be 26, 180 minus an actual yield of 182. Your actual yield is 182. This is 52, which we are going to say is what? This is an output. This is output. So yield means output. So we are going to say it is what? Favorable. Favorable. Okay. Your material usage variance, it's going to be your material mix variance plus your material yield variance. Plus your material yield variance. Your mix variance is 100 favorable. Your yield variance is 52 favorable. So that is 162 what? Favorable. Let's determine our material cost variance, which is your material price plus your material usage variance. Your price variance is 260 adverse plus 162 what? Favorable. Which means that is 98 what? Adverse. 98 adverse. And that is how you determine your what? Your advanced variances of who? Of material. Those are the advanced variances of what? Material. Alright. Now that we have understood the advanced variances of material, we also should look at the advanced variances of labor, the advanced variances of fixed overheads, and also the advanced variances of sales revenue. Okay. All right. I hope that has been clearly understood. That has been clearly understood. That has been clearly understood. Right. Now, when we meet in the next lesson, we will introduce the advanced variances of what? Labor. We will introduce the advanced variances of labor, which will be in the next lesson. So from me, you can attempt a question, to give you a question that you can attempt in your own free time. You can look at August 2022 question 5B as an assignment, just for your practice. Your assignment. Please look at this question for your own practice. August 2022 question 5B. Question 5B. There is a variance of what? It is an advanced variance of materials. All right. So allow me, and on behalf of the institution, or on behalf of Manifested Publishers, we can call it a day. See you next time when we will tackle labor variances and overhead variances and sales variances that are advanced in nature. So goodbye and God bless you. See you next time.